Thanks for staying with us on SABC News. Most Asian markets were range-bound after U.S. Federal Reserve officials fired more warning shots on interest rates. Japanese shares advanced in earlier trade as the Bank of Japan Governor Haruhiko Kuroda stressed the need to maintain an ultra-loose monetary policy to support the economy in the wake of data showing that annual core consumer prices in the country surged to a 40-year high in October. China stocks closed down today, tracking a cautious mood in regional markets amid concerns of aggressive U.S. tightening and domestic COVID-19 outbreaks. The Shanghai Composite Index declined 0.6%. Hong Kong's Hang Seng Index slipped 0.3%. When we go to the United States, the S&P 500 stock index fell on Thursday as hawkish comments from a U.S. Federal Reserve official and data showing the labor market remained tight led some investors to worry about more aggressive interest rate hikes coming. The S&P 500 lost 0.31%, the Nasdaq Composite losing 0.35%, and the Dow Jones Industrial Average falling 0.02%. The JSE is in positive territory this hour. The all-share index is up 0.9% at 72,795. The Industrial 25 index has gained 1.3%. Financials have added 1.7%. Markets in Europe are higher at this hour. Britain's FTSE 100 added 0.9%, the CAC 40 in France climbing 1.2%, and Germany's DAX has gained 1.1%. When we take a look at commodities, gold is trading around $1,764 and platinum at around $982 per ounce, while the price of Brent crude oil is at $89.60 a barrel. The rand is trading at 17 Rand 28 to the dollar, 20.58 to the pound sterling, and 17 Rand 92 to the euro. Right, let's take a look at what's moving the market some more. Warwick Lucas, the head of Galileo Securities, joins me now. Thanks so much for your time, Warwick. U.S. markets closing lower yesterday on the back of those quite hawkish comments from the Fed. What else was driving that?
Well, I think, Nzinga, after what was really a very positive recent inflation print, I mean, the market had been operating on the perception that inflation was going to roll over and the economy would effectively soft land. Now, I mean, soft landing is tricky on a good day, and clearly hawkish comments from the Fed would be at odds with the perception or the scenario that I just described, and it would reintroduce volatility and concern into markets. So I'm afraid it wasn't very helpful as far as equity market builds go.
Yeah, when we go over to Asia, we've seen in the last week a lot of commentators saying, you know, they believe that China's going to open up more. There's going to be less COVID-19 restrictions. Those hopes of the opening up kind of dashed in China now. How do the markets react to that?
Well, I think it wasn't helpful. I mean, look, China is a very important part of the global growth picture. So even though it's not as big an economy as the US, the total amount that it adds to global growth or global GDP growth is actually the largest number globally. So as such, the refusal for them to adjust their COVID regulations substantially certainly was a disappointment. And in fact, you saw that actually come through in those slightly weaker commodity index prices during the last week.
And then when it comes to Japan, their shares trading slightly higher. What's the story there?
Bit of a funny one. I mean, especially since in the last couple of weeks, the inflation's hit new highs and they've got a new trade deficit, and you've had the yen stronger. But I think it must be part of an overall sort of risk-off scenario for Japan. I mean, bearing in mind that the last few weeks we have had this risk-off perception, but I see it cooling off today, possibly on the back of everyone else looking a little bit more cautious.
All right. When it comes to the JSE, yesterday we saw them closing down for a second straight session. Why is that, and what's happening on the Johannesburg Stock Exchange now?
Okay, so I mean, we're working on a relatively simplistic mode in markets of risk on or risk off. A simplistic narrative. Now, the JSE, of course, is quite closely then following these both international indices and what commodity prices are doing. So those last few days of weaker commodity prices, it seems to have echoed quite nicely in the JSE.
Okay. We saw Richmond interim results out. What are those saying?
I think when we look at their strong results, and I mean they were strong in particularly in economies like the US and Europe, which are typically quite mature. And I think it's suggestive there of a very strong inflation effect coming through. I mean, those kind of luxury assets are in their way sort of hard assets. So in an inflationary environment, so-called hard assets are actually going to perform relatively well. And I think that caused quite a decent margin expansion there for them.
What other international company news stood out for you this week, Warwick?
Well, I think this one will surprise you, but actually Twitter stands out to me because and we see the kind of chaos that's there. It's almost how do you marry up corporate behavior versus an entrepreneur running a fish and chip shop? And what we're seeing is quite extraordinary. I mean, the news flow is incredibly noisy. I mean, we've just seen now in the last hour or so Twitter indicating now that it'll close all its offices until Monday the 21st. Now, this is on top of more than half of the workforce looking to be cut by head office. But in turn, they'll find that possibly well over that number will accept their severance packages and leave. I mean, it is just quite bizarre to pay $44 billion for a company and then plead poverty. So I'm absolutely fascinated as to what on earth Musk is playing at here and what he's going to do next.
Warwick Lucas from Galileo Capital, thanks so much for your time and insight there, taking a look at what's moving the markets locally and internationally. It's time for a short break. When we come back, SME On Point with Diabo Sito after a short break, and she will be looking after you for the rest of On Point. It's good afternoon from me. Stay safe.